Hey traders, happy Monday, everybody. Welcome to Charts and Coffee. Great to see everybody. All right, so we have an interesting week this week. Lots of holiday affected trading. I am based on the rhythm of the month of December, expecting a little bit of weakness this month. Before Christmas, we tend to see the last of the little dips we'll see between Halloween and New Year's Day, and it typically comes just before Thanksgiving, just before Christmas, and then that actually sets us up pretty well for kind of clears a runway, if you will, for Santa. Now, clearing the runway can feel a little bit tricky because you're seeing this weakness going into what is widely believed, probably one of the more bullish sentiments in Q4. And clearing the runway gets a little tough because we're going to have this pullback. It reminds me of Die Hard 2. Remember when Bruce Willis had to blow the plane up to light the runway? That's kind of what this week may feel like. And yes, Die Hard is a Christmas movie. Changed my mind. But this is going to be a little bit like Die Hard 2 this particular week, right? So hope everyone's doing well. And remember, we're going to have clearly a lot less attention and volatility paid this week because, most of what we're going to expect is coming in next week anyway. But nonetheless, we want to make sure we're staying on top of the calendar. Really, really, really quiet. You can see here, not a whole heck of a lot going on in terms of data releases in the U.S. It's not until I get out to Wednesday that we start to see GDP numbers, which on a rate of change basis is how we'll gauge how we'll look at growth. Core PCE, that's the Federal Reserve's sort of pet inflation index. That might be about the most important thing we're going to see this week, right? That might be it. Of course, Friday we're closed. But if there's anything to stick around to watch, keep an eye on that PCE, 8:30 a.m. on the 23rd. All right, so let's get to it. Good to see everybody. All right, jumping right into the first question. That is, hey there, Shaw, good morning. Is there a coal ETF? Not that I know of. Remember, even if some of these things exist, if there's a symbol for them, it doesn't always translate into it being liquid, tradable. But I do not know of a dedicated coal ETF. No, I don't. But, if you find one, here's an easy thing to do. Google coal ETF. You'll probably get a number of websites that'll discuss it. Look to see if there's a symbol associated. Then click on it to see what the volume looks like. You want at least about 500,000 per day, shares traded per day. And then go take a look if this thing exists at the options chain. So I can't recall one at all. So, maybe sometime in the future, but Sean, not that I know of. There, Air Condition Gypsy. Did Dell and Microchips ETF? Oh, so let's take a look at Dell. Sure. So Dell and the SMH. So taking a look at Dell, the trend that preceded the current chop that we're in was up. So it's hard not to be in some way willing to be a buyer at oversold levels. Currently, the -1 standard deviation on the V-score on Dell. Buyable. Is it my favorite? If I can find something in that same pool of stocks that Dell likes to trade with, then that it's grouped up by the ETFs, right? Then I might consider a relative outperformer. But Dell's buyable, as is SMH. Yeah, the semiconductors. That's very viable. Sure. I don't have a problem with a dip there. And then again, you might find some relative outperformers. Now, how do we do this? I am sometimes, and I'm proud of it, I'm very old school with my scanning, ridiculously old school. Because back in the day, if you wanted to look at a chart, when I started, either you drew it yourself, okay? There weren't a lot of scanners. high quality scanners. We've got a great high quality scanner at Simpler, but this is 3 decades of habit. I like to look at what I am potentially going to trade. So however it is you're curating the list of stocks, at some point, put them in a setup specific to the relative outperformance they have against each other in a curated way. What do I mean by that? If you're looking, let's say you did a scan and you found a number of powerful names. That's step one. That's the foundation. Step two is to compare like to like. That's where you find relative outperformance, not for disparate or technical reasons, but for reasons relating back to the passive investing universe. And that's at the heart of, what Sector Secrets is all about. How do we use probably one of the most incredible investing tools and in one of the most incredible trading tools in the last 12 years, which is how do we use ETFs to our advantage? So that's how we like to do it. So if I take a look at SMH, AVGO is a standout. I would also say Qualcomm's a standout, and Micron's a standout. And then, the SMH itself, in terms of the chop, pretty darn good. I'd keep an eye on Texas Instrument as well. We might take a look at that nice 200 propulsion test. That could be an interesting one. Not a trend, but it could be a very cool oversold fade. All right, hope that helps. All right, good morning, good morning. All right, let's move on to our next question. Let's see here. Santa did not consider, there's so much. So one is news and one is macro. Could the former affect the latter? For sure. If we can see a variant or the pandemic or just, generally affect inflation and growth, then at that point, it becomes a macroeconomic factor. So Santa may not have considered it, but we as traders have had plenty of time to continue to process each step of this. I mean, I think where this gets for traders trickier and bearish is if we start to get that same cycle ratcheting up again, which is here comes the variant, what is the spread, and then does this equate to some sort of shutdown, lockdown? And that's what we're constantly, this merry-go-round that we're on each time. And I do believe every time we go through that cycle, it becomes less of a shock. And therefore, it actually does become, in some ways, a little less bearish because, been there, seen that, right? So I don't know that we're there yet, but I do believe at some point the market's going to numb to this bombardment. And it will just say, look, if we're seeing a true effect economically, we know what the central banks are willing to do. But the way that you're right, juxtaposing the variance and inflation, at some point, the central bank's going to say, we can't do anymore. We can't continue to pump money into the system, but they could slow the pace down. So what I would say is, once again, let's measure it. What does the May Fed Fund futures look like versus June? And this is where the more complex parts of the market become simply what's the trend in this thing, in this case, say Fed Fund futures, that measures what the Federal Reserve is likely to do. I can't read their minds, but I can look at a futures contract that is very, very good at interpreting, extrapolating what's being said. So thanks for the question or comment. Jim asked, you can have different thoughts about equity in different timeframes. Absolutely. Oh, no doubt. Of course. One of the things I like to often remind everybody is, when I step into the rooms, whether I'm in the futures room, whether I'm in the mastery, whether I'm in the options room, I always say, look, I'm going to pull up a daily time frame. Because the one thing that I will say is absolutely imperative to understanding the importance of the daily is that people look at the close, right? So I'm not saying it's the most tradable, but it's the one that reflects the widest psychology, right? I'm not saying it's the best. I'm saying it's the one that reflects the widest psychology. So, another thing I like to say is when I see these little Twitter battles happening about a symbol, a lot of times velocity could be solved by one person saying, look, I've got a 3-month time horizon and I'm looking at a 60-minute chart. Or I'm looking at a 480-minute chart. And another person can say, oh, I've got a 3-year time horizon. I've got a 5-year time horizon, and I'm looking at a weekly chart. And you're absolutely right. So when I'm looking at symbols, and that's, a good reminder, if you want to look at a time frame, other than the daily, please let me know. I'll always come back to the daily at some point. Again, it reflects the broader psychology of any market, but a lot of times, especially, being a day trader at times myself, look, I still factor in the daily, but the setups will come from a different time frame. Great point. All right, Hess. I'm really not interested in. Look, I'd love to short Hess if it organizes into a downtrend, but we're just not there yet. And then also, I'd have to say I'm bearish crude oil. So this lines up with that really nicely. So maybe crack open. Again, going back to who is Hess hanging out with? It's such a simple question that's so often not answered. Who is Hess hanging out with? And is there maybe a trend that is bearish that looks better than Hess? Hess hangs out with, the one that's coming to mind is XLE, right? So then we ask ourselves, is XLE heading lower? Is XLE bearish? Because if it's not, I probably don't want to short Hess. And if you're thinking, well, I might want to buy Hess, then what I'll say is I would go through the symbols within the XLE, Exxon, Chevron, ConocoPhillips, EOG, Schlumberger, Pioneer. I know there's plenty in that list, and find something that's a relative outperformer to the long side. So directional bias would be the first step. Do I want to be a buyer or do I want to be a seller? What's the sector doing? I mean, this is sector sequence mastery laid out, right? Chevron is where bullishly my attention would be directed. So Hess, either find something bullish or find something bearish. Hess is putting us in a cool corner of the market. I would try to find more. All right. Silver says, I just earned a like. Well, I appreciate that. Yeah, absolutely. If you like the content, for sure, smash that like button always. YouTube loves seeing all that. And if you have a question, maybe you're watching this on a replay, maybe you're reviewing it later on, myself, Trish, we take a look at the questions in the comments on a regular basis. She's always taking a look. Trish is always taking a look at them. So if you have a question after the fact or even during and it's not in the live chat, leave a comment, leave a question. We do check them out. Investing, day trading, swing trading and day trading. Sometimes you have to blow something up. Yeah, it's very true. I do believe sometimes you do. Yeah, sometimes you have to do, then wait to see where the dust settles and say, all right, we get to start over. Yeah, I think there's some wisdom to that. All right. Next up is my TradingView layout shared somewhere on Simpler? Michael, I do not know of a way to share TradingView. I don't think there's a way to do it the way, say, you can do it with TOS. TOS, I can share a shared item, that TOS.mx link, and I can do that. But I don't believe there's a way to do it with TradingView. Now, with TradingView, they're always improving things. They're always adding things. It's one of the most robust and one of my favorite platforms, but I don't believe there's a way to do that. Now, I will say, if you go into indicators and you search Simpler, a number of the indicators that I use, we at Simpler have made those free since we made them available. So Darvis box, grab candles, propulsion, anything that does not have a lock next to it, right? And then some things I make available to members, right? So my HPMRs that I created a long time ago, members, certain upgraded versions of the tools like the Darvis 3.0, but there are a number of basic versions of the tools, of which I use for the better part of, in some cases, decades, available over at countdowntrader.com for TOS. And then the free stuff within TradingView is available within the indicators search right in the platform. All right. So thanks for the question. It's a popular one, and there's just no way to do it yet. How does AMD, look to me? A buyable, yeah, for sure, buyable. So if I'm looking at AMD, and again, I'm going to, work backwards. In other words, I'm going to level up, and I'm going to ask myself, all right, AMD, who are you hanging out with? And then, with AMD, that's going to land us right in the SMH. So I want things that look like SMH or buy SMH, right? Or just go with the tide and not an individual boat. So do I like things like AMD? Sure, sure. I mean, there's a higher likelihood that if SMH continues higher, so too will AMD. You could say the same thing about NVIDIA. Let's see, who has Taiwan Semiconductor? I would leave Taiwan Semiconductor alone. I mentioned Texas Instrument could be interesting off the 200 propulsion. Yeah, no doubt. Marvel's just been in fuego. I'd keep an eye on that one. So there are some interesting individual narratives. Qualcomm's another one that are I think viable. Qualcomm might be one to watch. Definitely, I would keep an eye on Qualcomm, right? So so AMD looks interesting, and so do those others. And remember, Warwick, they are hanging out together, and this is how we can discover that relative outperformance and really build the watch list in such a way that we're working with higher probability follow through. I mean, that's the goal. All right, Ben asks, could I comment on Task and Zim? Sure. Task is a short, if anything. Ben, double red. That's all I can do. And Zim is, well, we got a pretty nice Darvis zone between 47 and $45.50. 47 and 45.5. But I would look to short the rips on Task. All right, Hobo Historian. Hello, Raghee. How do I feel about XLU long into next year? So it depends on how defensive I want to play it. How defensive do I want to be? And I would throw XLP into that group as well. So I probably would say, look, buy the dip. There's no harm in that. There's no harm in buying the dip. XLU is primarily a play on NEE. This is your number one weighted stock within the XLU by a country mile. So I would say look at NEE, look at a lot of these individual stocks within XLU. You might find that you like one of the individual stocks even better, like NEE, over the utilities ETF overall. It's a defensive corner. And I don't doubt that we might see some flow into defensive corners of the market. The structure's there. The structure's there. It just happens to be more established in NEE. That's why I bring that one up. Is it a place to look for pullbacks as rates are increased, or is it priced in? No, I think you can absolutely go defensive here. Yeah, you can go defensive. And by the way, forget going defensive or not. It's an uptrend. And if it's an uptrend, buy the dip, right? And this is where I do find it rather silly when I look at Twitter where people start, talking about buying the dip in a very malicious or ignorant way, which is not every weak move, not every move to the downside is a dip. The dip prerequisite is an uptrend. If you don't have an uptrend, there's no dip to speak of. But because most traders are not following the principles of Dow, and they don't start off with a foundation of what is the underlying environment, because structure dictates strategy. Always. There is no exception to that. And so a dip and chop really isn't a dip. It's chop, a dip and a downtrend is just lower lows, right? So if we know how to pinpoint what a dip opportunity is, that means we know how to prioritize structure. So in this case, I would tell you, Hobo Historian, just follow the underlying market structure. That's gonna be your best bet in terms of high probability setups most of the time. And I don't mean it's going to assure you some sort of winner every time, but I mean, if you look over the course of a week, a month, a quarter, a year, and you've stuck with the principle of structure dictates strategy, and you've focused on the best structure for traders, which is definitely an uptrend for most, you're going to find that when you step back and look at your trades in the entirety of everything that you've taken, you should be ahead of the game. Is 165 a buy? 165. I think anything, yeah, I mean, that's a 55 exponential. Frankly, I think anything between about 169 to 164.80 is buyable. But of course, that then is at the heart of scaling in, understanding a scalable mindset, understanding allocating a certain amount of your budget at an agro level, at a moderate level, at a conservative level within the zone. So we're down near, I'd say, the moderate, trying to close in on the conservative this morning. We're in the conservative. So remember, I do believe there's a seasonality that could give us a dip. So you have to have a slightly higher tolerance, maybe, or you just focus on the conservative zone. And then what I'll do at this point is I'll just risk a certain percentage of premium paid, knowing that it could be a very unusual, wobbly week going into next week. But I do like XLK. I do like XLK very, very much. So let the market sort of absorb this. Again, over the weekend, we started to see Europe lockdown, shutdowns, whatever you want to call it, are starting to be implemented. Let the market absorb that. And then in that wake of fear and panic playing out in the market, in the double green environments like the XLK, in the particular sectors of the market that are not necessarily going to be as affected as others with a kind of a pandemic cycle. Be careful of oil stocks, be careful with oil and gasoline. But in certain corners of tech, I believe that's going to be a buy the dip opportunity. But let the structure dictate the strategy. Okay. All right. And by the way, if that resonates with you, Rag, I kind of dig the way we're breaking down these ETFs, and I kind of dig the scalable mindset. What is all that about? Scaling in, scaling out. If you like that, come check out what we're doing in the Sector Secrets Mastery. You have a fantastic group of people. I'm going to go join them here in a little bit. We're going to take a look at the markets here together, try to find what are those buyable dips, right? Where are those opportunities? Where are the sales, the blue light specials happening? And in the meanwhile, I hope this gives you a pretty good idea of knowing where opportunity may be. And Dan mentioned, I heard something that resonated with me and I wanted to share it with the Charts and Coffee family. Awesome. Thank you, Dan. Before you take any trade, know where you're going to be wrong. It has improved my trading. Yep, that's definitely our philosophy. Point of validity. Know where the trade is no longer valid. Dan, awesome share. Super, super, in terms of the right mindset, that's a perfect mindset to have. The only thing that we can control is the downside, right? We can't control the upside. Only thing we can control is the downside, and just make sure that we never are trading too large or too much that we risk ruin of our account. Absolutely. All right. Be good to each other, gang. I'll see you tomorrow, same time, same station.